Welcome to another Real Turkey episode. This is Guldem Atabay. My regular host is dear Atilla Yesilada, who's a well-known economist in Turkey. So we have, again, many agenda items to talk about. The first one is that Atilla, that we shall start with maybe the housing sector in Turkey. Last week we had the June data released. Which another, so I'm not, let me look at my notes for numbers. June sales have dropped by 48.6% year-on-year terms in Turkey, housing sales. The mortgage sales were down by 85% year-on-year. Only the sales for the foreigners have increased. They were up by 30.5%, which are distributed again among the Iraqi citizens, Russia, Germany, UK, and Kuwaitian citizens.
So what we no, Arabs are best friends. They're not buying real estate in Turkey. That's unbelievable.
That's unbelievable. Yeah, what we've seen was after the 2001 economic program in Turkey, with the coming down of the interest rates, inflation with Turkish lira very strong, we have seen a boom in the housing markets, housing demand. Everyone was buying housing, construction was being exploding in Turkey, and we had this renewal of our major cities because of the earthquake threat, which again fueled the housing demand. But since mid 2017, we're seeing, even before the peak of the currency crisis, we're seeing a very depressing housing market in Turkey, which is on an increasing trend in the last 8 to 6 months, especially after the peak of the currency crisis. Of course, with the inflation up, with the interest rates up, and a very weak Turkish lira. So what's really happening, and what is the future for the housing market in Turkey? Is it all dead? But we have a very big population, who are the young population is having the weight of that population, the center weight. So what's the future for the housing market in Turkey, do you think?
Well, extremely gloomy. And if you allow me, after the housing market, I want to address the plight of the construction industry, which is one of the biggest employment generators and also draws a lot of inputs from upstream industries. That really what concerns me more than the housing market. In terms of the housing market, it's an overbuilding problem. Yesterday, the chairman of Turkish Constructors Union or Association himself admitted that there are roughly 1 million units of, in Turkey we have apartment. We don't have independent houses as some rich people might enjoy in the West. So 1 million units waiting to be sold. Annually, the average new unit sales is 400,000, 500,000 or so. So there are 2 years supply of unsold housing.
That's big, yes.
It is big. Also, you have to remember, of course, the construction industry uses 80% loans and 20% equity. So these need to be financed for the next 2 years, and it's excruciating. Your cash flow goes down because housing sales have collapsed. The loan rates are very high. Banks don't want to renew your loans. For the next 2 years, I don't anticipate any recovery either in prices or in the housing industry, for the simple reason that, among many other things, demand for housing is a function of, as you said, employment, of people finding jobs, getting married, and making a better living. But Turkey's seasonally adjusted unemployment rate continued to rise in April, and I read a report by Baytam, a very respectable think tank. In May, too, the seasonally unadjusted unemployment rate will increase. So there are simply not enough people getting jobs to pay the down payment on a mortgage or to start savings to buy new houses. On top of that, of course, banks are now extremely unwilling to extend credit to anyone because of just so many non-performing loans and distressed or impaired loans, which heightens credit risk in their view. And finally, of course, high inflation has eroded the value of disposable income. So no matter how you look at it, a recovery in the housing market for the next 2 years is almost impossible. It's a buyer's market. It's a great, I mean, if you have the money, it's a great purchase. Now, construction industry is really devastated, and I expect a domino effect of defaults or appeals to the court for bankruptcy protection, because housing is only one segment of construction. Then you have commercial property and, of course, mega projects and state infrastructure investment. Mega projects have virtually stopped because there is no foreign financing. State has stopped new investments in infrastructure simply because there is no money in the budget. And last time I looked, which was about 2 months ago, the vacancy rate in commercial property in Istanbul was 30%, and still more buildings coming online. So there too is a buyer's market, and any potential for rent increases or price appreciation is extremely narrow. As a result of these things, construction activity, no matter how we define it, has virtually come to a standstill. I'm quoting again from this Baytam report. Over the last 12 months, construction industry shed 640,000 jobs.
Yeah, that's big. Yes.
And to recall, construction plus housing-related activities constitute roughly 10%, 7% of GDP, plus another 3% the contribution of other industries to construction. So yeah, go ahead.
Separating housing and construction, obviously, is there a potential for such firms that are in such troubles, financial troubles in Middle East, especially in the rebuilding of Syria? Is that why? Is it another reason for the government, Turkish government, trying to stay within the Syrian territory so that they can get a chunk of that rebuilding of the country in the future? And in the short term, we know that our central bank, with its new governor, is going to be speedily pulling down the interest rates. Looking at market expectations, it's ranging around 400 to 700 basis points by the end of the year, in an uploaded manner, which we know. Sorry, I'm thinking at the same time. I'm sometimes using the wrong words. Is it creating a room for the housing demand to start again through the banking sector, maybe from cheaper loans, maybe state-supported loans, along with the rate cuts? Is there room for that? Are the Turkish banks really suited to support the government's ambitions on that front? And the housing sector, the construction sector, its future markets, is it really feasible, or is it really doable for such firms in trouble?
From the viewpoint of construction companies and home builders, Iraq and Syria obviously are mouth-watering stories. But in addition to the establishment of peace, Ankara also needs to improve its relationship with Assad and the Baghdad government to get any share of these rebuilding tenders, because obviously, as anywhere else in the Middle East, these tenders tend to be highly politicized, and if you don't have a good relationship with the government, which we don't at this point, you can't get a big share. And I think this is one of the reasons why Turkey is so intent on remaining in Syria. The second one is we have 4 million Syrian refugees who create immense psychological problems for AKP voters. But going back to the more short-term issues, I agree with you. The new central bank government, God bless the governor, God bless his soul, the poor guy. I don't envy him. I wouldn't want to be in his place. He's essentially forced to cut interest rates. But the monetary transmission mechanism in Turkey is broken. The way interest rates stimulate housing demand is central bank cuts policy rates, bank borrow more from the central bank, and then deploy these new funds into loans, for instance, mortgage loans. But this is not how it will work. If central bank cuts rates and allows banks to borrow as much as they want to through the open market window, it's quite possible that a lot of this money will go into foreign currency as assets rather than mortgage loans. The problem from banks' perspective, the problem with both construction and housing loans is creditworthiness. It's just that, well, when you have high unemployment, on average, it becomes riskier to make a new mortgage loan to an individual or family. And similarly, when home builders can't sell their houses, obviously you don't want to lend to them. So honestly, no matter how you cut it, we need very strong growth, at least 4% per annum in real GDP terms. And we need very rapid disinflation to bring down the nominal interest rates for any recovery in housing industry or construction industry. And I don't think any of these are in the foreseeable scenarios.
So this week we have seen a Reuters news that was saying this troubled loans concentrated in the energy sector and the construction sector, basically. The efforts to reconstruct or restructure these loans.
Or reconstruct, because God knows, I mean, what they do with their loans, no one knows.
What they do with these loans and why this why were these efforts failed or is failing? What is the size of these loans? What's the negotiation is about? So we had seen our Treasury and Finance Minister Albayrak trying to he introduced a new package or reform package, which was not really reform, but it was concentrated on these troubled loans for Turkey. That was the big news. So what's going on that side, combining that the talks have stalled? What if they stalled? What if they continue? What's the end result that Turkey will receive by the stallment in these talks? Is it more trouble? Is it more failures or bankruptcies for these companies? What's the major impact on a bigger picture on the Turkish economy?
Well, Reuters covered only part of the story of troubled loans. Let me give you a bigger perspective, largely quoting from AKP Congressman Mr. Mustafa Savaş, who introduced the Omnibus Economic Bill in the Parliamentary Commission. Non-performing loans plus loans overdue, that is, loans not being serviced properly, total 400 billion liras, or roughly $55 billion. Okay?
Yeah.
And unless, as you said, construction, energy, and retail recover immediately, those troubled loans are on their way to become non-performing loans. And that's roughly 15% of the total loan portfolio of banks. Yesterday, I read a note by JP Morgan. They put the potential NPL ratio in the Turkish banking system at 13%. Now, give credit where credit is due, but Albayrak's idea of launching two special purpose funds, one for construction, one for energy assets, where banks can dump these troubled loans, then they can be resold either in packages or individually to qualified institutional investor, is a good idea. And the new omnibus bill prepared the legal groundwork for these transactions to take place speedily, but it doesn't solve the essential problem. So far, I have heard that there are investors for these. I mean, I know that for a fact. People are just, crossing their hands.
Yeah, it's about the price, obviously.
Yeah, but in one news report, potential investors offered 50 cents on the dollar for the loans. In another one, 70 cents on the dollar for the loans. Yeah, so this means that either the borrower or the bank has to swallow the loss. In Reuters article, the potential size of these two industry troubled loans is cited as $30 billion. Let's say these loans through market value is 70% of book value. So there would be a loss of $9 billion. That's a huge capital.
That's a huge, yeah, for Turkey, yes.
Or either you forgive that, or companies must put up new collateral worth $9 billion, which they don't have. So both sides, both lenders and borrowers, are looking up to the government to come up with some funding, or crossing their fingers and hope, according to the Reuters article, crossing their fingers and hoping that miraculously Turkish economy will shift to the fourth gear and demand will increase automatically, which I don't.
Just interrupting you here, we have again this week the Reuters poll for GDP growth estimation: 1.9% contraction for this year, 2.4% GDP growth for 2020, and 3.4% for 2021, which means that this fourth gear is not really going to happen
I mean, this
in the
is
near term.
Some kind of, the tulip mania.
Yeah.
This is exactly the opposite, but the same symptom of a social madness, because central bank expectations survey 2 shows a forecast for GDP decline this year, and next year's growth forecast has been revised downwards to 2.2%, I believe. So where do these companies and banks who lend to them get their forecast? I don't know. I would like to meet their economists and have a chat with them. But anyhow, it's not going to work out. And the government doesn't have any money to put up. So I've always said what the end game will be, and it made me extremely unpopular, even with my family. IMF. I mean, IMF needs to come up with some upfront cash and conditionalities, of course. IMF also has the expertise to sort out these kind of complicated debt problems. I think it has worked in Greece, it has worked in Spain and Ireland, I believe. In Turkey, no one has any experience with a corporate debt problem. 2001 was a banking problem, a banking insolvency problem. And there were like 30 banks involved. Bringing them together and whipping them until they agreed to a solution was relatively simple. Now we're talking about, never mind the small ones, we're talking about maybe 500 to 1,000 large to medium-sized companies with, loans, completely different covenants, completely different collateral. You need to assess the viability of this business model. It's a nightmare. It's not something we can do without expertise. Once IMF comes in and provides the seed cash for these funds, then Turkey's regulatory authority, banking regulatory authority, BRSA, must step in and force banks to recognize losses. Right now, we have incredible forbearance. That's laxity. Mm-hmm. Any bank can restructure any loan without citing any reason for the next 2 years.
It's which just means delaying, yes, postponing.
Yeah, extend and pretend. That's what JP Morgan says as well. They don't have to put aside any provisions. So for them, it's a costless way of betting on future. And of course, it's moral hazard. That's what they do. But to cut a long discussion short, we don't have an infinite amount of time to solve this problem because the clock is ticking. Anytime the economy grows at a pace, say, less than 3-4%, more and more loans become non-performing or impaired. And in a year or so, you have the Japan route or the Italy route, to be perfectly honest with you.
Atilla, thank you very much for your enlightenment and enlightening for us. And let's see you next week again.
Bye-bye now.
Bye-bye.